I wanted to take a look at Alibaba stock. BABA is the ticker symbol, Baba stock for short. What's going on with Alibaba stock? Baba stock, of course, did its IPO in 2014, shot up pretty nicely, but over the past several years, Baba stock has been falling considerably. There are many competing factors that are going on in China that is affecting Alibaba stock. First, the Chinese economy itself is slowing down dramatically. China really kind of overinflated its own economy by overbuilding infrastructure. They had at times double digit GDP growth rates. But this is all, as we're finding out, smoke and mirrors. What's going on with the real estate market right now is likely to really affect the overall domestic demand for China. Alibaba stock, of course, gets about 40% of its revenue from China. So if that portion of the economy or Alibaba stock's revenue is declining considerably, the prospects are looking grim. A lot of international investors are getting out of China. For the first time, we're seeing net moves out of China. That's huge. China depends on that money coming into China to continue to develop. But the economy, of course, with the real estate segment slowing down as fast as it is, could really dive into, say, disinflation, where you're seeing prices start to fall, which would be drastic for the overall economy in China. There's another competing interest going on that would affect Alibaba stock significantly, and that is China itself wants to open up its economy and be a world leader, but at the same time, the Chinese government is trying to control and defend China itself. Those two interests are competing, and you never really know which one is moving forward. Chinese government, going up to Alibaba themselves, has constrained them significantly, and this is affecting, again, investment potential within Alibaba stock. So where does Alibaba stock go from here? Baba stock is actually, when you look at their future revenue based on, even here in the United States, revenue increases and what you would get if you bought Baba stock today, yield based on the next 4 quarters and the coming years after that, it's underpriced relative to other investments. So Baba stock itself would be a good investment as management comes in, gets rid of a bunch of pet projects that never panned out, heavy in debt, cutting those losses there, selling off assets that are underperforming. This makes owning Baba stock a compelling argument. Would we see the highs again? That's a long shot for right now, but what I want to do is break down Alibaba stock and show the value, what it's worth right now based on yield. But at the same time, you also have to encapsulate what's going on in China and how that might affect domestic demand in China and ultimately Alibaba stock. Baba stock is hitting lows. It's below its IPO price. But let's jump in and I'll show you a few things that I'm looking at for Alibaba stock and why it might be a compelling counter-China move. Let's jump in. As a value investor myself, when I look at stocks, I ask the question, what are the fundamentals of any company? Alibaba stock itself actually does ring a few bells. It looks like a compelling opportunity, but you got all those aspects about China itself. Things I look for are continuously increasing revenue, continuously increasing earnings per share. Those two variables right there, if you continue to see revenues increase and you see your earnings increase as a value investor looking at Baba stock, it's a really sort of underpriced stock that could move higher. But there's so many things going on in the background. Right now, management's coming in and just chopping off a few things, sunning stake. They're selling off those aspects of the company, the underperforming projects that previous management got involved in, and they're cutting, current management is cutting those things loose. But the contrarian China bet is sort of interesting. Keep in mind, though, Alibaba stock relies upon China for about 40% of its revenue. Now, here's the latest chart, trading about $75 for Alibaba stock. Alibaba stock, this is a 4-hour bar chart, and looking a little further, there's another aspect that I didn't mention in the sort of intro there, COVID lockdowns. China really cinched down on the entire country, and that really affected domestic demand within China. Eventually, the people just started revolting, saying this is just ridiculous. So you're still seeing some lags from that, whereas the rest of the world appears to have been emerging out of there and moving forward, which would be a plus. Taking a look at Baba stock, their latest financials, $36 billion for Q3. I want to kind of go through here quickly, but projected revenues $141 billion for 2024, $152 billion for 2025. This is important for me as a value investor when I look at Baba stock. We're seeing analysts expect revenues to increase despite selling off certain assets, which would go more towards total assets versus revenue increases. But you can see in 2024, 141 and then 152 for 2025. The problem with this is, and this is sort of something you have to balance, investing is a popularity contest. And even though you're seeing some of these increases like we are for Baba stock, what's happening is that doesn't necessarily translate to Baba stock moving higher because people are leaving. We're seeing net decreases in investment in China. So this is affecting not only Baba stock, but China in general. Moving forward, looking at some of the margins, 34.4% for gross margins for Alibaba, and then operating margins at 11.9%. Finally, net margins. Alibaba, Baba stock, keeping about $5.50 for every 100 that they bring in. It's a little lower than normal. It's lower than the S&P 500, which prints about 11.5% in the past couple quarters. So this is significantly lower, but at the same time, when you're looking at Baba stock, you also have to understand that they're taking losses in certain areas, which would affect net margins per se, but not necessarily operating and gross margins. What I like to look at is earnings per share, and a pretty decent move higher. You really want to compare with Alibaba stock. You really want to compare year over year as well as full year. And as you can see, slight drop from Q3 in 2022 for 2023. Projected earnings per share 2024 863, getting back on track 985 for 2025 for Baba stock. But here's really kind of the big story, price to earnings ratio. Normally, this stock probably trading about 30 times. So it's about a third of where it could be relative on a price to earnings ratio. I wanted to break down what's going on with alternate investments. Now, let me give you an idea of Warren Buffett as a value investor. He's got about $150 billion in U.S. Treasuries right now, and bonds in general. The reason why? It's one of the biggest yields you're going to get in town. Treasury yield trading about 4.3%, the U.S. 10-year Treasury. The U.S. 10-year Treasury is your benchmark. You look at the 10-year and you ask the question, okay, compared to this, where is potentially Baba stock? SPY stock yield. So what I do is I break down all 500. There's actually about 503 stocks in SPY stock. And I look at each stock, one share individually, and ask the question, what's the yield based on the next 4 quarters? Add those up, divide by the individual shares. You're looking at about 4.85% for SPY stock. For Alibaba, 2024 earnings per share projection, 8.63, giving you the price, and yield for Baba stock, 11.438%. That's double digits. This is significantly higher than the U.S. Treasury yield, and then, of course, SPY stock. But does that necessarily mean Alibaba stock is going to go higher? For me, fundamentally, if that yield is there, I believe, looking at sort of a philosophical approach to China, I don't think they have much choice when it comes to the pressure between the United States, um, their saber rattling, things of that nature, that regardless, considering the Chinese economy, even though they may want to stand proud and be like, you know what, we want to defend our nation, we want to build our militaries, and this is the path we're going to take, in order for them to be open for business, they have to act a certain way. So there's some limitations as to what China itself could do. Given that, however, Alibaba is a Chinese company, and what we have here in the United States is just an ADR traded here in the United States. So they can flex their muscle. The Chinese government can flex its muscle over top of Alibaba, which would affect Baba stock, but they can't necessarily flex its muscle against its biggest trading partner, the United States. So it's something that from my perspective, what I look at and say, you know what, you can say all you want. Are you open for business or not? And we're their biggest customers. We're just going to give them a bad Yelp rating. And that's kind of one of the things that you kind of look at, that China has to understand. There's other countries in the world. And if they continue down any kind of road that's anti-U.S. trade, that's on them. But considering what is happening with domestically with their economy, especially with the real estate situation, where this really pushed domestic growth in China, I don't think they have much choice. I think they're up against a wall that they're going to have to sit there and kind of balance what's going on, and they might not have found that balance yet. But still, China, the government, could exercise some capacity over Alibaba, the company within the China itself, which would affect Baba stock. Beyond that, you have the collapse basic collapse in real estate in China. They rebuilt the entire country effectively. I was there in 2000. I was there in 2000, and I was there again in 2006. I haven't been back since. But the big leap that I saw from 2000 to 2006, and the photos I see on the internet all around, it shows how much China has transitioned. So much so that it's beyond their own capacity. They have, I mean, you see these ghost towns all over the news and photographs and things like this. That really pushed domestic demand. That domestic demand, that lack of push, would affect revenues for Alibaba. But I showed you some future projections for revenues for Alibaba that encompassed what analysts believe in China, as well as looking at other countries throughout the world. Given that yield is still there. That double-digit yield of 11% is still there. Again, however, it's a balancing act of looking at what the Chinese economy is going to do, how the Chinese government is going to react in that situation with the real estate slowdown. At the same time, what kind of force would they exert over top of Alibaba itself? I'm thinking that there's going to be some kind of balance, and that this issue itself is probably not as big as expected or feared. But that doesn't mean all of a sudden there's going to be a net inflow of money going back into China. The story of China is slowing down. The United States of America, of course, one of the few countries that is growing rapidly. You're looking at Great Britain and Europe staring at a recession, that this is really starting to affect investors per se, and they're bringing their money back into the United States. Doesn't mean eventually they can't send it back to China. But for me, the Chinese story seems to be played out, that without that domestic demand from real estate, there's going to be issues, and the Chinese government's going to have to respond. Still, you have those revenues for Alibaba via analysts, which would push Baba stock up much higher. I wanted to kind of put some put a video out on Baba Stock simply because I put one out a couple months ago and it did very well on my channel. I just launched this channel a couple months ago and it's growing very well. Thank you so much for all those following along. That first video on that I put on this channel for Alibaba Stock really did well, and I wanted to follow up on that. I see the issues with Alibaba Stock being addressed significantly. I believe that the Chinese government is going to be forced to address certain issues in certain ways, and that the Chinese economy will continue to grow, albeit very slowly comparatively. In the meantime, Alibaba stock with their revenue gains, this is at 11% yield over the next 4 quarters. From a value perspective, this is a strong buy for those who are strong-willed, because there are outlying issues that could be a concern. Once management gets over certain humps, I believe Baba stock will attract more stock investors, and because of that, Baba stock does go higher. I believe we are probably sitting at the nadir right at the bottom there, and from this point we could see a very slow trend higher in Baba stock. From a value perspective, this stock could go up much higher. Make sure to hit that like and follow button if you want to see breakdowns like this on certain stocks, including Baba stock and the broader stock market. We'll see you in the next video.